today's morning report analysis videos on Thursday, the 5th of April, with me, Richard Brown, market analyst at Hantec Markets. We have had a big turnaround in sentiment. Yesterday, the markets were sort of looking at this trade spat between the US and China. And initially it looked as though that the reaction from China would be taken as a real negative. But then you sort of saw a turnaround in sentiment. You had US administrative members coming out and suggesting that it wasn't going to turn into anything significant and there was going to be a compromise deal that was going to be reached eventually. And certainly that has helped to turn equity markets on ahead. We saw the S&P 500 sharply rebounding higher into the close. We've seen that continue in European markets today and Asian markets overnight. And it has certainly just triggered this improvement in risk sentiment, whereby the safe haven flows have been reversing. 1348 was the high on gold yesterday, now sort of $22 lower from that. The yen is back above 107 figure. That's a key level of resistance that the yen is now. The dollar yen is the dollar yen is now above 107 big figure, which is a key level of resistance being taken out. You can see treasury yields, which are sort of now moving higher. 10-year treasury yield up on the day, 2.82, and the 2-year as well ticking higher. So interesting turnaround. We're seeing the dollar, which is ticking higher slightly. Not a huge reaction really on the dollar, and I'm still looking at this as being a sell into strength. Ultimately, between sort of 90 to 91 area is a key level of resistance, I think, on dollar index, and I think that will be ultimately where we see the next sell signal. But certainly we have seen this turnaround in market sentiment. The VIX volatility pulling back lower as well. So that has certainly seen market sentiment improve, and that is something that traders are continuing to sort of push through today. My chart today reflects that on the Aussie yen trade, but I'll talk about that in a bit as well. Now, in terms of data points today, we've got the service sector PMIs for the European markets, European economies, which have been announced this morning. And they've been disappointing. So you've got a continued rolling over of the Eurozone PMIs, 55.2, which was slightly under the 55.3, which was the flash reading, and 55.2 is sort of just continuing this deterioration in the Eurozone PMIs. Data points are continuing to fall over. You've had German factory orders disappointed in Germany. I can't see it on here, although they were disappointing this morning. And not only that, look at the UK UK services PMI, 51.7. That is a really low number. Yes, you have to factor in the fact that we had very, very cold weather, the beast from the east, they were calling it in the UK, but still that is a very disappointing number from services PMI, which is 80% of the UK economy. This afternoon we've got the US trade balance, international trade figure for February, 56.8 billion negative, so it's a slight deterioration in that number, and it certainly doesn't help the data point that in the US continue to deteriorate. Is that going to come through in any time? No, it's not. We're still sort of seeing the data for trade balance deteriorating in the States, which is not going to help that the dollar going forward. Now we've also got my chart of the day that I want to talk about, which is the Aussie yen. Now this is a key level. This is a key resistance, and that has been broken on the market, and what we've seen is a move above 82 figure, but also we've broken that downtrend channel which has been in place for the past few months. Since 2018 really the market has been trekking lower highs, lower lows. Now we're starting to turn a corner potentially with the broken trend for that move to the downside. We've seen that yesterday's move, or today's move I should say, 82.57 has hit that resistance pretty much not a million miles off to the tick, and that is a key level that the market will be looking out for, I think, near term, because a break above that really does suggest that I think the market is turning a corner. Yes, we've seen that downtrend channel broken, but you want to see a confirmed sort of higher low, lower high being broken, and the 82.57 would be that level of lower high being broken. Now, look at the momentum indicators. We've got the MACD lines, which are crossing higher and accelerating higher. The stochastics similar, accelerating higher. RSI 48, that is the highest it's been since early February. So there is an improvement on Aussie yen, and that is reflective of the fact that the market sentiment has turned around. Two strong bull candles in a row, and as I said, 82.57, I'm taking that as a key level near term. A breakout above that, certainly on a closing basis, would bring you back into the next pivot, which is around this 83.30 area, but also then brings you 83.30 to the next key level of sort of resistance, which is 84.40, 84.50. So yeah, we could see a continued recovery if 82.57 is broken on a closing basis on Aussie yen. So I wish you good luck in your trading today, and I will speak to you later.